the good, the bad, and the ugly of infinite banking. Did you ever wonder if infinite banking is so good, why everybody is not buying it and why all of the advisors are not recommending it? Well, today we are going to share with you the industry secret that nobody ever told you like this before. And we are going to give you the concept and example backed by some real life numbers from an insurance company. Hi, my name is Sunny Mitra, founder of Bright Horizon Wealth. We teach entrepreneurs and go-getters like you how to own their financial future with the concept of infinite banking. If you are new here, please subscribe to our YouTube channel and hit the notification bell so that you are notified when we upload new videos. I'm going to start out showing you two illustrations. The first one is, if you hadn't found out our website and you read about infinite banking, if you went to an agent in your area and said, hey, I heard you can use cash value life insurance as your bank, the agent will say, oh yeah, you can, it's a great deal, let's set you up for a policy. Well, here is what we'll set you up with. We're going to give you a comparison between a base policy, which is a plain vanilla whole life insurance policy, compared with another one which is a whole life policy but based on the concept of infinite banking. Okay, you see on the left, that is your policy premium, which is $5,000 a year, and that generates $339,000 of death benefit. But look down on the far right hand column underneath net cash value, and what do you see in the first and second year? You see zero. This is not an infinite banking contract. Where did that money go? Well, I'll give you a clue as to where the money goes. Life insurance agents work on commissions, and life insurance agents generally want to get the most commissions as much as they can. Well, on the $5,000, that money went to buy you $339,000 worth of death benefits, but it did not do much for you in cash value. The entire $5,000 is commissionable to the agent. She is going to be happy. You as a consumer are not going to be happy because it's not going to generate the cash value that you are looking for. So the next illustration is the IBC illustration. As you all know, IBC stands for Infinite Banking Concept. Here is the exact same $5,000 in annual contribution. Actually, it's $5,001. I had to stick a buck in there as my commission. Now, you look up at the total stated amount as the death benefit. Instead of $339,000, it's a $158,000. I mean, the death benefit is way less. Well, how come? Go down now to the column which says net cash value, and you will see in the first year there is $2,684 in cash value just in the first year. That is a big difference. Now, the agent is not getting paid her commission based on $5,000. She is getting paid on about $2,200. The rest of it is going to build the early cash value in your contract. So that's the difference between these contract designs. If you ever go on and look for infinite banking practitioners, you will find that there are not very many of us around, and that's one reason. I mean, which agent wants to take a 50 or 60% haircut on her money, on the commission? Not very many. Lopsided. They don't understand, because what you are starting out is, and maybe in this area, I have got clients that own businesses and want to put $100,000 or $200,000 a year every year, and even the small amount of $100,000 or $200,000 makes the bill collector go away pretty quick. So you should not feel sorry for the infinite banking practitioner. We do okay. Here is the difference between those two. On this illustration that I'm showing you, this is a true infinite banking design contract. So while you see a premium in the first year of $5,000 and that does not need to be paid in the first year, if you go up and you see you have a flexible premium of $2,780, that is something that you can put in next year to create your $5,000. Or if you decide not to put in that much extra next year, you don't have to. So it gives you the flexibility of contributing up to the maximum amount every year or dropping it down and contributing the minimum and then bring it back up. That's a true infinite banking design contract because it gives you the client the flexibility. If we do it the other way, the rider is not flexible, it has to be paid. So unless people are really absolutely positively that they have to have a little bit more cash in the first year, I prefer to use this design because it gives you more long-term flexibility. And keep in mind, like I said, this just is an example, so you can end up doing whatever you want to. Leave us a comment below with your experiences regarding infinite banking. If you want to learn how you can use your whole life insurance to achieve financial freedom. So again, remember, regardless if you have any debts now or you are planning on taking on some loans, we can help you create a plan where you are either taking it over now or building up a plan where you can pay for everything from your own bank in the future. If you like this video, let us know by liking it and leaving a comment for us. Make sure you share with a friend and subscribe to our channel. And always remember to own your tomorrow by converting your liabilities into assets.